The euro-dollar pair fell slightly during the month of January, but still remains locked in a fairly tight range. However, with potential stumbling blocks such as the ECB monetary policy meeting and NFP Friday, will February be quite so plain sailing? Andrew Grantham joins me down the line for Wednesday's forecasts. Andrew, analysts say the euro-dollar could go one of two ways, test the 140 mark, but if we break below the current 135 level, it could pave the way for a push to 133 and even lower. Now, you've chosen 133 in the short term, so tell us why.
Yeah, well, we have seen since the start of the year just a kind of a gradual move lower in the euro-US dollar. So even with some of the emerging market volatility and the decline in the stock market that we've seen in recent weeks, and we still see them continuing down that path, and that's going to be the main reason driving euro-US dollar lower in the near term.
Andrew, 129 is your 3-month target. Is this due to the expectations that the ECB might be pushed into further action? And if so, what action might that be, do you think?
Yeah, so we're looking for further decline in the euro relative to the US dollar. So we've got, in 3 months, we've got 1.29 as our target. And as you said, it's kind of like it moves from a Federal Reserve US monetary story to one of the ECB. So we see maybe them pushed into another LTRO or something similar in the kind of 3 to 6 month horizon. And that should weaken the euro a little bit more against the US dollar.
Looking further down the line, should the Fed continue to taper at the current pace, there is a suggestion they might have to start seriously considering raising rates. But won't most of this scepticism be priced in? You've picked out 127 as a key level. Tell us why, Andrew.
This is again mainly related to a broad US dollar strength. We see the US economy performing pretty well. In 2014, we're 3 or just above % growth. This year, we're still slightly above the consensus, so we still see scope for some upside surprises in the US. And with that growth lowering the unemployment rate, we could, by the end of this year, have the markets pricing in the possibility of the Federal Reserve hiking rates, maybe even as early as the second quarter of 2015.
So there we have it. Despite expectations of further easing in the form of an LTRO from the ECB, Andrew Grantham from CIBC World Markets forecasts 133, 129 and 127 as his short, mid and long-term key levels for the euro-dollar. Will these predictions hit the target? Well, only time will tell. But from Andrew, from myself and for now, it's goodbye.